Because you've already done question 1, I'm going to work through this one a little bit faster. This question has given us certain information and we are going to solve for the unknown in the expanded accounting equation. At the beginning of the year, X1, as you know, I like to put up a beginning row, an ending row, and a change row. So at the beginning of the year, assets were 90, contributed capital was 10, and retained earnings was 40. The unknown for that row is liabilities. During the year, assets decreased by 20. Put a minus 20 there. So the missing piece here is ending assets. Liabilities increased by 30. Missing piece here is ending liabilities. And capital contributions increased by 70. Now it's going to ask us to compute assets at the end of the year. You know the basic formula. If you take your beginning assets and you add the change during the year, you're going to get your ending assets. 90. Now this is actually a reduction. So 90 down by 20 gets us down to 70. So our ending assets are 70. Compute beginning liabilities. Well, we don't know beginning liabilities. And we can't solve this vertically using the beginning plus change equals ending because we only have one of the 3 variables. We would need at least 2 of these variables to solve for the unknown. However, looking horizontally, we know that all 90 of these assets must be claimed by the lenders and creditors or the investors. The equity in these assets is 50. Therefore, the difference, which must have been funded by debt, is 40. Compute beginning liabilities. Compute contributed capital at the end of the year, X1. We know the beginning, be 10. We know the change of 70. Therefore, the ending contributed capital must be 80. Compute retained earnings ending balance. Well, this one's a little tricky because we know we don't know the ending, but we also don't know the change. If we wanted to solve this horizontally, we can't because we're missing an additional variable. We would need at least to know that ending, which we could solve right now, but let's say we don't know it, and we don't know the change. So what do? We can take the approach of solving for ending retained earnings because all of this, lenders and creditors claims and the owner's claims must add up to a negative 20. So if you take all of this, that's 100 plus something equals negative 20. The only way for that to work out would be for this to be negative 120. So 100, and then you take away 120. It's like you're out here on a number line, here's 100, and you're trying to get to negative 20. So that swing here is a minus 120. Now that we know the change in retained earnings, we say if we take our beginning of 40 and we have our change, which was down 120, we would get our ending. So 40 minus 120, take away 120, is negative 80. You start with 40 and you take away 120, you will get negative 80. That means they don't have positive retained earnings, they have negative retained earnings. What that means is not only did they not have income that they retained, but rather they had losses that they retained. They had net losses, and that net losses is reducing owner's equity. So that is ending retained earnings is negative 80. So that's actually not even retained earnings. We actually call that accumulated deficit is the actual name for that in a corporation. Now, how much did retained earnings change? It went down 120. Probably due to net losses. Or they could have paid out a lot of dividends, more than they should have. What was total equity at the end of the year, X1? In order for this to work out, beginning of 40 plus the change of 30 equals the ending of 70. If you work this out horizontally, you'll see this is 150 minus 80 equals 70. Work it out horizontally, work it out vertically, and you've got this type of problem nailed down. So total equity, now be careful that you read the question carefully. What was total equity at the end of the year? Total equity is these two pieces combined. That's total equity, and total equity is actually 0. The owners have no equity in this business because all of the assets are fully claimed by the creditors and investors because this nets to 0. Please practice these problems, then go ace the quizzes.